Alright, what is up, beautiful people? Let me put this slower. September 16th, 2025, Asia Wednesday. And let's go over a trade recap that I did take today on gold. Alright, so going into today, I actually was leaning towards taking all-time highs here. As you can see, right over here, in New York, we actually wicked up, created a new high, and then we went all the way down to a 4-hour gap, which we created a huge wick and bounced to the upside. So going into Asia, I was leaning towards breaking this high and then eventually pushing to this hour, 4-hour, and all-time high wick. And my bias was that because one, we were reacting off of a 4-hour fair value gap, and we created pretty much bullish PD arrays. We have a fair value gap here. We created one here, which we did at respect, and we created another one here just before open, which looks like we were respecting it until we reversed here. Yeah, so going into today, my bias was clearly bullish. Everything on the high time frame and the lower time frame were aligning. So why not take a long, right? And I took a look here. My original bias is we break and we go. And 8 p.m. hits, we actually did not completely break it. We didn't have a clean break. And then we wicked, and then we rejected the highs here. So, okay, I have no trades. I told myself I'm just going to be patient. Let's see what happens over here. So this was the 50-minute opening range. Nothing happens. But what I did see over here is we created a lot of liquidity here on these highs. And we started creating bearish order flow. So you guys can see, it's not rocket science, just good old market structure. We create lower lows and lower highs. And on top of that, another confirmation is we're actually breaking previous support. Here's support, react, boom, we broke this level, we broke this level. And on top of that, there was a 15 minutes and 30 minutes bearish PD array that was created, which was a fair value gap. So going there, I had one, we have signs, clear signs that the market is slowing down and we want to reverse. Two, right, look over here, we're creating bullish market structure up until this point where we just go down. So two, there's a shift in the structure. Three, we are creating bearish order flow, creating lower lows, lower highs. Oh, sorry, lower highs and lower lows. And then now, what are we seeking? Let's see if there's any high time frame narrative or any high time frame liquidity. So you go to the 1 hour, you scale out. As you guys can see, we have these lows, these lows, these lows, and then eventually we have a gap, which is a wick. So it's stayed a low, which we can fill. So let's take up. Let's see what happens here. 9 p.m. is Sydney Open over here. 9 p.m. we created the 15 and 30 minute gap, which confirmed that we are now reacting off bearish PD arrays, meaning that my bias of targeting all-time highs has been flipped because we're showing so many signs and indications that the market wants to go for lower draws. So at this point, okay, I'm only going to go for shorts. And what is our strategy? Simple. We are now reacting off a key level, this 1 hour low. What do? We have a breaker structure. Okay, and this is a clean breaker structure, as you guys can see. At the time here, this looked like we were going to miss this trade. But what ended up happening is we retraced to a fair value gap. And again, the strategy that I showed yesterday is if there's two fair value gaps right beside each other, if you want to have a safe entry, because there's big moves happening, you put your stops just above the second fair value gap. Okay, yes, you can do this to be aggressive, but I like to be safe, and this is what I've been back tested with, so I'm just going to keep my data. We break, we have a breaker structure clean, as you guys can see, right? Just look at the left, we have a clean break. We react off this FVG, which was my entry, and then we just targeted liquidities, right? And let's say we miss this trade. I also said this was a possibility as well. We could look for re-entries if we broke this low and this low, which, I mean, looking at it, there would have been no re-entries, so you would have missed a complete trade here. But yeah, I'll go over here. If I was very passionate about it, you could actually take all the way to these 4-hour draws, which would result in a 5.8R. But because I already had these 4-hour lows, I didn't know what the market was going to react with. We just had a 1.89 and another winning day on the eval. And we're very close to passing our... Sorry, another winning day on the funded. But we are very close to passing more evals, which is good. And we're just going to continue to scale and scale and scale. But again, an important lesson for today is look how long this was, you guys. From 8 to 9:20. Okay, I was locked in. I was looking at every candle reaction for the 1 hour and 20 minutes. And what did I do? I decided to be patient, not force any trades, and wait for a setup to come to me. Okay, yes, although I could have maybe entered off of this reaction, again, right? If I'm able to stick to my plan, my strategy, and just simply wait for an A+ setup where we target 1 hour draws, 4-hour draws, this right here just backtested on A+ setups, you guys, around 80% win rate. Now, if it's not an A+ setup, around 60 to 70% win rate, which is still pretty profitable. Yes, another winning day. 2 more days we can request another payout, and I'm not planning on under risking. I'm actually going to start full 1% risking because on the evals we are now sitting at the 103k buffer. And yeah, that's it for today, you guys. We'll see if we have any trades tomorrow and Asia Friday. We'll see. As long as I do not force any setups, I should be good psychology, mentally. And yeah, that's it. You guys have a blessed day. Peace out.